And the second quarter data from the National Pensions Commission shows over 63,600 new RSAs were registered and associated pins issued to employees in different sectors. Meanwhile, pension funds are expected to continue to grow as the current higher yields on investment in fixed income securities will raise nominal returns. Oguche Agudah, CEO of Pension Fund Operators Association of Nigeria, joins me now to discuss this and the July numbers of PenCom's net asset value. Well, thank you so much for taking the time out to join us today.
Thank you, Esther.
Well,
Nice to be here.
Right. Let's get your take on the numbers. The 63,600 new retirement savings accounts were registered in the period under review. What are your thoughts on this number?
Yeah, the number is growing steadily. The good thing is that because it's compulsory, every quarter and every month we continue to add new numbers, and these are people coming into the job fresh. Of course, it could be more if job growth is strong enough. But the good thing is that there's consistency, it's compulsory, and we have a split of both private sector and public sector new joiners coming and getting their pensions, which is good for the industry and which is positive.
Maybe I should rephrase that question. The pace of growth I'm just looking at the number and the pace of growth. I mean, you just said it could be better, but should it, given the size of the industry, etc.?
Yeah, so I think that's a month-on-month growth. What we've seen over the last couple of years, or over the last 1 or 2 years, has been strong growth, and growth has really been driven by investment returns. You spoke about the strong fixed income market. You spoke about equity prices are up. So in terms of asset growth, assets is growing. In terms of numbers are also growing, not as strong as we would like, but it's growing and it's consistent. And I think for us, that's positive.
Okay, let's quickly talk about asset class distribution. 1.8, according to PenCom, 1.8 trillion was allocated to corporate debt securities, 1.58 trillion to money market instruments. But we still see, investments in FGN securities continuing to dominate portfolio. I guess for obvious reasons, we're seeing higher yields. But talk to us about this asset allocation. What you think about it? Is this going to always be the picture? I guess given the state of our markets.
Yeah, I guess in the foreseeable future, this will all be the picture in terms of 65% in government bonds. Most pension funds will take the maximum that they can with government bonds. And then we see the money markets, because money market yields are strong. And then equities. Equities is about 7.5% in the latest report, up from about 7%. So of course, with the positive bull markets, there's been some shifts to equities. So we'll continue to see it at those sort of levels. So even though it's growing, the percentages continue to be around those levels. Again, corporate debts also about 11% of the assets. So those are the large buckets. So once you have the federal government securities, money markets, corporate debts, those are typically the three the largest, and then we have the equities.
Now, looking at the numbers overall, would you say that these numbers are in line with your projections or outlook for the industry at the beginning of the year? Are we doing better? Are we just doing average, or what are your thoughts?
Yeah, and I think we're doing slightly better. Over the last quarter, it grew. The assets grew about 7%, which is higher than the typical 2 or 3% it grows quarter on quarter. And I think the last quarter was driven by the equity markets growth, really. So it's slightly higher than what we thought, but I think for the full year, it's going to be around the pace of 20% year-on-year growth. That has been the average over the last 5 years, grown about 20% on average over the last 5 years. And we think this year we'll also see that number. So it's really consistent with what we thought it will be.
And looking also at the industry as a whole, and probably from a regulatory perspective, what else could this industry benefit from policy-wise?
Yeah, I think sometime last year there was a policy about enabling RSA holders to use part of their pensions to fund mortgages. So some of the things is, how can contributors benefit today before they retire? One of them is using it to fund mortgages. So that's something that we're excited about. It hasn't picked up as much as we would like, but trying to tweak things here and there and to enable more people use part of their RSAs to get their homes. So that's one thing I think in terms of policy wise we should see again. Another thing is the fact that some people who their organizations paid their pension, but for one reason or the other wasn't credited. There's now a deadline for December for you know individuals to check with their PFAs, check with their employers. If you haven't gotten your credit, that's one thing that we think between now and the end of the year, we'll see more people getting credited who had not been credited before because of one reason or the other. So those are some things on the horizon.
Well, just on the back of that, would you say that, compliance levels are satisfactory across the industry, and the penalties for defaults, are they strong enough? Are they adequate enough to, keep everyone in line?
Yeah. So with compliance, of course, we always like compliance to be higher, definitely. We can't get to 100%, but we like compliance to be higher. So with the multinationals, with the large corporates, we've got strong compliance. With the smaller businesses where compliance is not there. And there is a system within the industry run by the regulator where, they have recovery agents, and then there's a lot of engagement with employers who are not paying. And there's also a whistleblowing scheme. So with that, we hope compliance levels will go up. And as you know, also, if anybody wants to benefit from any government contract, they need to show their pension compliance certificate, or if you need to raise money externally or even from our financial markets. So that helps to drive compliance, in addition to some other things. So, of course, we'd like compliance to be higher. It's not where we need it to be, but, a number of these things will help to drive it further.
We have just 1 minute left. I just wanted to quickly take you back to that 25% that pensioners can use for mortgages. Why do you think it's not getting the traction that the regulator was hoping for?
Well, I just saw a report yesterday about mortgage rates are now 24%, so that might be a reason. But again, I think publicity, getting more people to know about it, and just ensuring that compliance. So you must have been contributing for at least 60 months.
Right.
So I guess people are getting to that compliance level so that they can have access to it. So that's a condition to access it.
All
60 months.
All right. Thank you, Oguche, for your time today. We appreciate your insight on this report from PenOp. Thank you so much. Oguche Agudah, CEO, Pension Fund Operators Association of Nigeria.